I'm even thinking like out there, I can take some hard money off the beginning, get it turned over, and do it a lot quicker. Because here, I
Yeah.
mean, for me, it's a 4-year project to turn over a building, and then I'm only estimating 65 to 75% of the business or the building turned.
Yeah. Recently, I did a $400,000 reno on a 20-suiter, adding 7 units into it. So there
Nice.
was a big open games area that was uh, not in use, and we added 7 one-bedrooms into there, and we had that turned over in just under 2 years with financing.
Well, hey there, everybody. Welcome back to the Mark Loeffler Experience. We got another great show here for you today. As you saw from the intro, we have Dean joining us from Calgary. We're talking all things multifamily, all things Calgary, maybe a little Red Deer thrown in there as well. And hey, listen, I'm taking you through how I explore my new markets, how I explore, the deals I'm going to do and the questions I ask of people so you guys can learn. So if you guys are going to go into a market, you guys can definitely go and check these things out. So if you guys do like this, definitely smash that like button for the YouTube algorithm. It really does help. The more you smash the like button, the more it shows the videos to more people to be able to go out and share this with the world. So if you guys enjoyed this, definitely smash the like button. Also, share this on some social media if you're in some groups and you think they might get some benefit. I really do appreciate it. It does help the channel grow. All right, thanks. Let's get into it. We got Dean coming to us all the way from Calgary, Alberta, from the back country there. He was skiing, and he's came in to help me out, hopefully help you guys out. Going through this, Mark's going to be investing in different areas. So I'm kind of starting to do my research on these areas, what I can get, what I'm going to pay. That type of thing, tenant profile. And I can do a lot of this obviously from my office in Oakville and not have to go to Calgary, although I'm looking forward to it because I really want to go hit up the ski hills. Dean and I had met a long time ago at the Real Estate Investment Network. I used to fly out to Calgary a lot. Some of you guys used to come this way a fair bit as well. Obviously, I'm selling some of my portfolio here, and I'm going to be moving those to other areas, the U.S., hopefully Alberta a bit. I've just really just started the process of now, okay, what's it going to cost me to be there? What's the opportunity? I really like to BRRRR apartment buildings. So, buy them with a little bit more rundown and fix them up. So decent areas type thing. So, I mean, just, I don't know, tell me a bit about it. Because I was on MLS yesterday looking what's available just on MLS, but we know that not all the time these things hit on MLS, right? So
Yeah, I I would say about 40% of the time these multifamily listings hit the MLS, and 60% of the time they're pocket listings. They're a guy knows a guy who knows a guy, and the sale usually happens that way. So it still runs through real estate, but just off MLS.
yeah, it's
And
the same. It's the same here. But you have a pretty decent portfolio out there, correct?
yeah, I personally am invested in 240 units, and of those units, there's 17 mid-size apartment complexes, and the rest are single family, which I've been trying to divest from, but the market just hasn't really allowed that over the last few years. But it really hasn't stopped me from continuing to buy multifamily, which I believe it's a money making machine when it's set up properly, and it's purchased properly. It's set up properly. You get all the bad apples out of the buildings and try to run it efficiently. It's generational wealth creation.
Talk to me about a little bit about the market then. Like, what's the market doing now? Is it like, I mean, it's frothy here. Like, I listed in one of my apartment buildings. I had like, I don't remember. It had a lot of offers on it, and they're selling like less than three caps.
Wow. Okay. Yeah. That's not our market space right now,
No, I know.
which is good for buying, not as good for selling. So maybe you heard on the news or not, the single family market in Calgary and area is doing very well. listings.
Yeah,
Yeah.
we did see. So we just did a market update, and we were going through all the stats there, and we were seeing that it was starting to really pick up there for sure.
Saying that it doesn't necessarily translate into multifamily because that's a
Which is
different market share.
good for me because I'm a buyer.
Exactly. So if you're looking at buying right now, I kind of view it as Alberta's on sale. You know, the world got hit with COVID. We're still working our way through that, but we had a double whammy with all of our oil we're producing here. Things slow down. You know, some of the big companies have merged. Husky's kind of disappeared now, Husky Energy, and lots of job loss around that. It's I wouldn't say stagnated the multifamily market, but it has slowed it.
What kind of cap can I expect to buy for something that has some lift? So if I come in and I turn units, like what's like in a decent area? What like I'm not, and I'm not going to hold you to this, but just in general.
Yeah, the cap is anywhere from the nicer, larger buildings, but we're still talking. I'm not talking any Class A or Class B assets because I don't really talk that. I'm like you. I like the Class C. I like the stuff that's got a bit of hair on it that you got to work it, and it's great. In my opinion, that creates the best value, the best return for myself and my investors. But on a Class C asset, you'd be looking around 4, maybe 5% cap. And
Okay.
I've also purchased quite a few units outside of Calgary in the Red Deer market. So
Okay.
Red Deer's right in
Half,
between Calgary.
halfway between, yeah.
Yeah.
I mean, I remember stopping. So when I was in REIN, I did the speaking tour there, and we went from Edmonton to Calgary, and we stopped at the bookstore in Red Deer. So me, Don, I think Russell there, and we all signed our books at the thing, and we have pictures there. So
Oh yeah,
yeah,
yeah. So Red Deer's just over 100,000 people, and you can be buying in there anywhere from a 5 to 6, maybe 7% cap.
obviously one of the things like I'm super close to where I am now. Like I'm 20-minute drive to the majority of my properties, which is good and bad. I don't really go see them anyway, so it really doesn't matter. Like if I drive by them, I'm like, oh, I own that, and that's basically all I do. Um, what am I looking for? Because I know you do some property management as well. What am I looking for on the property management front? If I'm buying these C class properties, right? Like walk me through, okay, Mark puts the offer in, I get it accepted, I get everything done, I'm closed. So day one, like I know you guys different rules there. Can I just go boot everyone out?
Alberta's got the least restrictive tenant landlord tenant rules, which is another great reason to invest here. But you can't necessarily go and kick people out, but at the same time, you kind of can.
So
Um,
we can just do an economic eviction, right? I can raise rents double,
you
and then
can.
people will be like, "Oh, I'm not paying that. I'm going to leave." Or
So there's two things. One, if they're in a fixed term lease, you got to wait for that to
yes,
expire.
definitely. Okay, yeah.
But what I found in the purchases that I've done, most of these purchases are from older people that have just kind of let their tenant base just kind of slide and created all these concessions and everything, and they're running on a month to month.
That has totally been my MO here. I've been buying off guys who own the buildings for a long time. There's not a lot of deferred maintenance because do if something comes up, they obviously have the cash because they have no mortgage on it. So yeah, I've done a lot of that here too. I mean, that's been my bread and butter lately.
Yeah, so in that situation, you could boot the whole building.
Yeah.
Yeah.
So all right, and then secondly, like I love buying concrete buildings here. What's my like? What's the the building type that I'm buying out there? Is it concrete? Is it stick built? Like, what are we thinking?
You'd be pretty hard pressed to find a concrete structure here. And
Yeah,
if you do, you're paying a lot more money for it. So it's
yeah.
mostly stick framed, and then on the in between the floors they have that layer of concrete just for noise reduction. But that's really the only
Okay.
concrete sitting on a concrete foundation, of course.
I was looking at this building just on MLS, 2730 17th Avenue West. I mean, that looks like a decent building. I mean, it's
Yeah.
160 a door, built in 1976. Would probably tell me that, like, is it concrete or?
No, so that building would be stick framed with a
That's
stucco
stick frame.
exterior, and
Um,
that's a good building in a good area of town, and it's actually pretty close to me. But that's a great building. You're probably that building's sitting at a 4% cap right now,
okay.
but it does have the underground parking stalls, so it's probably around a B is my guess. I haven't seen it, but
I do like buying Bs and turning them into As because, to be honest with you, I find, well, I mean, and I don't mind Cs, but obviously here in Ontario, we have a lot of trouble getting tenants out.
mhm.
So if it was a lot easier and we could turn a C into a B plus, I mean, I would be doing that all day long. So this is again why I'm looking at these opportunities. So, I mean, say I bought this building and we came in, and I don't, do I have pictures of the units? I don't think there's pictures of the units there, but I'm gonna assume they're probably dated because you're getting 850 for a one bedroom and 1100 for a two bedroom.
They're probably not in super rough condition, but they won't have new flooring or fresh paints, and so there'll be some costs associated with that, and probably some work is needed in the common areas as well.
For stuff like this, what I typically do is I come in and I make them like condos. So I do brand new kitchens, dishwashers, marble countertops, new lighting throughout, and I make it really really nice. Like, what's my rent on a one bedroom or a two bedroom in this neighborhood? Like, what could I get them up to?
So these ones are very low right now. A one bedroom should be around, with the condition that you're saying, around 1100, and then a two bedroom would be probably 13 to 1400. There's a unit I have right now. It is a condo unit and was just completely refinished, and we're renting it out for 1800. In it's a newer, larger complex in a
Yeah.
really good area of town.
And what have you seen rents doing lately? Have they been going up? Have they been going down? Because I mean, I remember last year everyone was telling me they were cutting the rents.
It was going down last year, and then people hunkered down with COVID, and then amazingly enough, rents went up. And currently, they're kind of flat, and they have been going down a bit. But if you're fixing up your units, you're stealing market share from the next person who has the non-fixed up unit.
Yeah, somebody's willing to pay that extra $200,
Yeah,
$300 for some to live somewhere nice. Like that's
yeah.
always what I found here too. Like if I come in here and I put like laundry in each suite and I do all that type of stuff, like is like that's gonna obviously put me above the crowd, right? Like that's not a lot of people are doing that, or
For sure, it would. Not a lot of people are doing that, and in my experience, you got to be careful with the 1970s vintage, just for pipe diameter for supporting all that extra laundry equipment. But
yeah.
if you retrofit it and do that and put it in there, you're head and shoulders above the next person.
So this is obviously in Ontario, this would be considered a new apartment building. Like that's what throws me off because like you can get stuff built in the 90s to 2000s in Alberta because they've built, right? Like they don't have they don't have the shortage of supply like we do here.
I would not call that a newer building, 1970s vintage, but yeah,
So
things are
if
different.
I bought a 1975 building here, I'd be considering that, oh man, it's brand new. It's almost brand new. I
Oh,
mean, obviously, you have to do work and do all that type of stuff,
yeah.
but it's like it's pretty new to us, right? Like there's basically since 1980, there's been nothing built. Like there's
Hmm.
like one here, one there, and they come up, but they sell at like huge premiums. Just run me through, like I can run the numbers on the expenses, and I mean, I know your taxes are lower out there, which I love. Um, like, what am I looking on a property management basis on something like that?
So on a building that size, you'd be anywhere from 5 to 7% uh,
Okay.
management fee off the gross rents.
Yeah, and then
And
I'm assuming I'm paying 1 month's rent for lease up. I mean, obviously you've never seen my units, but like what I'm talking about, like IKEA kitchen, marble countertop, nice vinyl flooring, laundry, dishwasher, stainless steel appliances. What am I looking at to renovate that unit?
that unit would be, if you said quartz or granite countertops.
Yeah.
Yeah, you'd probably be in the 12,000 to 15,000 range.
That's half what I'm paying here. So
That
even if we said 20, because I factor in like the common areas and stuff like that. I mean,
yeah,
just the lack of, I guess, provincial tax on there helps too. But like, can I get trades there?
you can right now. So I guess, without giving away too many of my secrets, my trick of the trade is on the project management side. So I've got a background in project management, and I don't go with the larger trades that, one guy comes in and does it all. So I typically project manage it myself through my company, and then get the guys, who do a good job, who I have history with, but the guys who need to be paid the next day.
Yeah,
So
and that's typically who I work with here too. So,
yeah.
any other tips or tricks you want to share with me as I start this journey? I know I'm gonna have to fly out there, so like, I know you didn't invite me, but we're gonna go backcountry skiing. Like that's
Yeah,
um,
I would say, looking to do business out here, find the right property management, because you can't walk over, you can't drive by every day.
yeah,
So find the right property manager, find somebody who's just not working for a paycheck, but actually has investment properties of their own, who's, been around the block and understands how these things work. And, a property management company that can help manage your upgrades as well, and
yeah.
give you suggestions, because you're not there every day.
I guess on the other front is just before we go, financing. What are you guys doing for financing out there? I've been all Schedule A bank, non-CMHC, 65 to 75% first. Appraisals
Yeah.
coming at value.
So what we've been doing on the last 4 buildings I've purchased, we've been running our financing through Bank of Montreal, which
So
has been,
I've been doing BMO too.
oh, that's interesting.
Yeah.
Yeah, they seem very bullish on multifamily these days. We used to use RBC, which I've had a lot of trouble with them in the past 3 to 4 years.
Yep.
And BMO's financing us up to 75%.
So same thing. Okay.
Yeah.
And
Yeah.
probably same rates, like on a 2-year, you're like 1.9 to 2.1.
Yeah,
Honestly,
might be a little higher.
I'm even thinking like out there, I can take some hard money off the beginning, get it turned over, and do it a lot quicker. Because here,
Yeah.
I mean, for me, it's a 4-year project to turn over a building, and then I'm only estimating 65 to 75% of the business or the building turned.
Yeah, recently I did a $400,000 reno on a 20-suiter, adding 7 units into it. So
Right.
there was a big open games area that was not in use, and we added 7 one-bedrooms into there, and we had that turned over in just under 2 years with financing.
Wow.
So,
Okay.
and cleaning up the tenant profile as well.
Well, Dean, I know you have a stop at 11 o'clock, or 9 o'clock your time. So I don't want to keep you. I really do appreciate this. Yeah, we're going to be chatting again really soon. So expect to hear from me. Like, my goal is to, in the next year, like, buy 100 units out in Calgary or Alberta in general. So,
Money well spent.
and if people want to reach you, what's the best way people get a hold of you if they're interested as well?
Yeah, so my website, or my company's Soul Property Solutions, with SOUL Property Solutions, and I'm Dean at soulpropertysolutions.ca.
We'll put those down. We'll put the website in the description down below. If you guys did enjoy this, please share this on your social media platforms. Thank you, everybody, and hopefully you learned something. And we look forward to buying a lot of buildings in Alberta. Everyone, thanks for watching. I think that was a great episode. If you haven't already and you're still around, smash that like button. Also wanted to talk to you a bit about the premium group. As I analyze these buildings out in Calgary, I'm going to be putting up all the sheets that I do up into the premium group. On your desktop, there's a join button. Just go ahead and join. I think it's $8 a month or something like that. You also get the property analyzer, And we're going to be doing some live Zoom calls starting next week with Mike on the stock front. So if you guys do want to look at that, definitely go ahead and do that. And there's a video there that explains it all as well. Thanks, everyone. Have a great weekend.